Hey guys, Mark Pyers, home-based business tax coach and wealth coach. I'm also the CEO and founder alongside of my beautiful wife and business partner, Mrs. Lavita Pyers, of the most incredible, one-of-a-kind, nothing like it, tax educational platform called the Academy of Financial Education. Operating now since 1994 for myself and together with my wife since 2004, we have been teaching the masses what the school system has been forbidden to teach, and that is, in my opinion, in my honest opinion, the number one financial subject that every American needs to know, bar none, and that is, the more you know, the less you legally, ethically will owe in taxes. Let me put that another way. The more you get informed about the United States tax code, the less of your money you will lose in the form of taxation, legally, ethically, and morally, and 100% taught directly from the IRS. Guys, look, today is November the 15th, 2024. I am under the weather. In fact, I've got this severe cold and I sound like I'm talking out of my ear. So I'm going to jump right into this. But before I do, let me do a little bit of house cleaning. If you're on my channel or you came across this video on my channel, my YouTube station, maybe Facebook or some other social media platform, I want to encourage you, if you got value or get value from this information, guys, to subscribe to my channel. More importantly, I want you to do me a favor. I want you to be a good steward of this information, and I want you to hit the share button, because what I'm going to share with you, millions upon hundreds of millions of families will go through their life and never learn the invaluable information that I'm going to share with you in this short period of time. I'm going to try to do a lot less talking and a lot more of just providing the information. Again, I'm under the weather. I probably sound crazy, because I sound like I'm talking out of my ears. I'm all stopped up, but guys, I am fired up. Last night I was going through YouTube, scrolling through YouTube, couldn't sleep, and I came across a gentleman's YouTube station, which I'm not going to mention his name nor his station, and he was talking about velocity banking. Okay, now there's all of these folks out here on the internet, and I'm not knocking anyone about the information or information that they share, but when I see information that I know is flat out wrong, that is flat out leading people off the cliff of financial devastation, it irritates the hell out of me. Okay, now I'm not saying that I know everything, but I'm going to tell you right now, I have dedicated my life to learning directly from the IRS how to legally, ethically, and morally keep as much of my hard-earned income as possible. And I have helped hundreds, if not thousands of people do the same. And I am one of the only people that I know that teaches it, whether it be by video or in person, that information directly from the IRS. So I got a lot of information to go through. Again, guys, make sure that you subscribe to my channel, share this information, be a good steward of it. What you're looking at on my screen is called the U.S. Debt Clock. You can find this information right here at usdebtclock.org. Okay, I want to bring your attention to over here where I'm waving my mouse. Let me see if I can expand it a little bit more for those of you that might be looking at this on a cell phone. And I want to focus here just briefly on this number right over here, the U.S. national debt, $36 trillion. You guys see those numbers rolling? Those numbers are the devaluing of your dollars as each second goes by. Let me say that again, because I'm going to show you this in real time. That is the money that you are currently working for on your job. The money that you are saving in an account that is not producing more money, that is devaluing every second that I talk to you on this video. In fact, you will find a lot of information on this particular site as to why your money doesn't go as far as it used to. And so, guys, I'm going to be focusing on what this gentleman was talking about with the velocity banking. Now, I know some of you are out there, you're going to come at me with sharing, what velocity banking is to you. I'm not really interested in that information, guys. I understand what it is. I just want to share something in contrary of what this guy was talking about, because what he was talking about is you taking your mortgage and paying an extra $300, $500, $1,000 a month just to bring down the interest of that loan. I'm going to show you guys a very simple way. It's just one simple way, but this is not the only way. But it is a way that you can actually reduce your interest by thousands of dollars without having to pay any additional money. And so I want to encourage you to grab a pen and a paper. I want to encourage you to watch this multiple times. I'm going to try to keep this under 30 minutes if I can. I'm going to pack a lot of information in here. And again, I'm not feeling my best, so I want to jump right into this and try to do less talking and more documentation. So I'm going to jump over here to, I'm going to go here to this calculator right here. In fact, before I even get into giving any type of illustration for examples, I'm going to give you guys a real life experience that my wife and I experienced. My wife and I purchased a home in 2009. In fact, I'm going to go ahead and I brought up what's called, in fact, I'm not sharing any personal information that you can't find out about us. And this is what's called the good faith estimate. You guys can see that right here. Okay, this is a real life illustration. We acquired a home in 2009. You can see that right here. The price of that home was going to be $401,591. The interest rate back then, this is in 2009, was 4.875. Not too far from where interest rates currently are today here on November 11, 2024. They're roughly around 5%. I think JP Morgan is offering somewhere around 4.875 today. All right. So I'm just going to scroll down here and get down to the nuts and bolts of all of this. This was going to be an FHA loan. If you don't know what that is, you can find out more about that. We were going to put down 3%. So our total with all of the closing costs and all of these fees, because when you buy a home, there's going to be a bunch of fees depending on who your lender is, but you will have fees. We were going to put down $16,138. So I'm going to go over here to Credit Karma mortgage calculator, and we're going to just run some of these numbers really quick, right? So again, the house was 400. Let's say 410,000. We'll go 410,000. How much money can you put down? Let me jump back over again and look at what it was. It was 16,138. So we're going to go 16,138. And let me scroll up here. Desired loan amount is going to be 398,862. Estimated rate, that was 4.875%. Again, you can get that rate today. The loan is going to be 30 years. Property tax, this is annual, so I believe it was about $12,000 a year. Homeowners insurance for the year, I think this is annual, so it was $1,200 for us. We didn't have any HOA fees. Not going to worry about the credit score. In fact, credit score doesn't matter for this. Let's hit calculate. Okay, so we can see that it's saying the estimated monthly mortgage payment is going to be $3,184.35. That's including your taxes, insurance, HOA fees, okay? Now, this isn't dead on. This is just a projection, all right? But here's what I want you to understand. The total interest paid over this 30-year loan, this is what you're agreeing to. Now, I know I'm going to have some people that's going to say, Mark, nobody stays in their home for 30 years, or they can refinance, and all of these if and woulda and coulda and shoulda and I wish. But I want you to know what you're signing up for, and I'll show you why here in a moment, okay? Total interest paid over the life of the loan is $356,400. Let me put that into perspective. I'm going to come over here to a percentage calculator. Let me see if I can blow this page up. It's got all this advertisement on here. And I want to make sure that you guys can really see what this looks like. So give me a moment and see if I can expand this. Okay. All right, so let's go ahead and put that total interest in. $356,504. And what was the cost of the home again? Guys, $410,000. So I want to know what that actually looks like. That is 86%. I want you to get this. I'm going to pause for a moment because this is about the time that I go off the cliff and lose my mind. Because if I would have known this at the time that I signed the document, I wouldn't have purchased the home. I wouldn't have financed the home. And I'll show you a little bit more deeper as to why I say this. 86% more on top of the $410,000. Let me see if I can break this down for those of you that are missing what I'm saying. You signed a contract to purchase a home for $410,000, and at the end of your contract, you paid the $410,000 plus 86% more because you bought a home that you couldn't afford to pay cash for. Now, I know what you're saying. So here's what that looks like. At the end of your loan, you would have paid $750,000 in mortgage payments. You would have paid sum of total monthly payments of $1.146 million on a $410,000 home, when in essence your loan amount was less than $300 or less than $400,000. Their loan amount was $393,862. You guys really ready to see the reality of what's going on here? Let me see if we can bring up the amortization calculator here. Let me see if they'll let us see that. Okay, so it says that we can click here and get the actual breakdown. So let's see if we can get the breakdown. All right, so let's go ahead and plug in those numbers once again. So the total loan amount was $410,000 for 30 years, and the interest rate was 4.875. I just want to give you guys a look at what your payment looks like each month. So here we go. $2,169, $410. There's a loan amount. Let's look at the amortization portion of this calculator. I'm going to blow this up because I need you guys to really see this. This is when you make your monthly payment. This is what's going to happen. Okay? So payment amount is $2,169.75. $1,600 $63.92 is going to interest. That is the amount of your payment that is going to the bank. $1,663.92. Wait a minute. I thought that the interest rate was 4.875. Let's go back over to the percentage calculator and let's plug these numbers in. Okay, so your payment is $2,169.75, of which $1,663.92 in interest is going into the bank pocket. Out of your $2,169.75, guys, that is a total of 76.68% of your money each month going into the bank's pocket. Let me put that another way. That is your hard-earned income doing exactly what the government money is doing right here. Dwindling away. You're sending $2,169.75 to the bank. And out of that, the bank is saying, give me my money up front. I want $1,663.92 or 76% of that in my pocket today, because I know that you're most likely not going to stay in this loan for 30 years. You're probably going to refinance it. You're probably going to move. You're probably going to lose the home. So we want our money up front. You guys see that? You guys see that? Right here. Right here. Okay? This is year one. Or month one. Month two. Okay? Let's go and take a look. This is 2024. So let's go 6 years down. So from 24, 6 years is going to take us to 2030. All right, guys. So here we are 6 years later. You're still paying $2,169.75, in which $1,519.53 is still going to where? Interest. It's not even helping you pay down the home. Let's go back over to the calculator. So 1519.53. 1519.53. Let's change this to 1519.53. You're still paying 70% of your payment goes into the bank pocket. I hope you are getting what I have just shared with you. Now, am I discouraging you from being a homeowner? Absolutely not. Absolutely not. What I'm encouraging you to do is to be a good steward of your money. So let me show you one way, guys, as I get ready to wrap this up, because I'm really not feeling that good. We're going to take that same $410,000 loan. We're going to take the same interest rate of 4.875. We're going to take the the length of the loan for 30 years, and we're going to do a comparison here. Okay, now let me see if I can expand this so you guys can really see this. Guys, this is what's called a bi-weekly mortgage payment calculator. All right, let me bring my calculator up here. Okay, same example, same mortgage payment, $2,169.75. Here's the bi-weekly down here. Instead of paying it once a month, you're going to pay it twice a month at $1,084.88. So let's do the math on that. 1,084.88 times what? Times 2 times a month gives you $2,169.76. Guys, the same payment, but let me show you the difference. Let me expand this a little bit larger. Let me show you the difference. Now, again, the top is making the regular 30-year payment. You're paying once a month. You're paying your bill on time. When I say if you pay your bills on time, you're paying your bills too late. Let me say that again for the person in the back of the room that's going to miss this. If you're paying any loan that you have on the due date, you're paying it too late. So here's the reality. $371,111.34 let me go back and clean this up. $371,111.34 is what you would pay in interest over the 30 years of this loan. Remember, how much was the home? $410,000. And you gave the bank $371,000 just in interest. That's on top of the 410. I want to make sure that you understand that. You're paying over $1 million, almost $1 million for this home, okay? Simply by paying the same amount of money. Twice, splitting the payment up by 2. They call that bi-weekly. We're going to, watch this, we're going to minus the interest that you would pay down here, which is $301,762.73, saving you $69,348.61 in interest. But it's actually more than that. We're going to divide that by the 30 years of the loan. That's $2,311 per year that you're going to save in interest. What would happen if you put that $2,311 a year in an investment? What would that look like for you? Well, let's take a look. So $2,311. Let's take a look at what that looks like, guys. So we're going to say $2,311 annual contribution. Again, $2,311 that you save annually at a 10% return. And we're going to say over the life of the loan, which is 30 years. And we're going to hit calculate. There we go. Guys, we're talking over 420. I hope you guys see this. Let me blow this up. If you took that $2,311 and you annually invested that in the market and got an annual rate of 10% over the life of that loan of 30 years, that money would have earned you $420,471. I think that right there was worth you watching this video to this point. If all you did was split your mortgage payment the same amount of money by paying it on the 1st of the month and the other half on the 15th of the month, would save you $2,311 per year in interest that you would have lost to the bank. And you put that money in the market at a 10% annual rate of return, which I know you can do better. Over the life of that 30-year loan, you would have got the principal portion of the home back in your pocket. Guys, I had to pause there for a moment. Look, I'm telling you, I am so excited to be back in the saddle to teach information, guys. If you got value from this, you haven't seen nothing yet. I'm like only 5%. I am totally just struggling to get through this, but it was on my heart to do this. I don't even think I'm going to edit this video. There's so much more I want to show you. There's so much more I want to show you. I wanted to actually show you guys. I just don't have it in me today. Remember that home I showed you that we acquired for $409,000? What if I tell you that house today, right now, Zillow is saying that house, let me show you, that house now has a market value of $996,700. What if I could show you that when we sold this house in 2016 for $556,000, I'll show you right here, okay? We sold it for $556,000. What if I could show you right here? You can see right here we sold it October the 3rd, 2016 for $556,500. We purchased a home for $409,000. We didn't make a dime on it. For those of you that thinking we made a dime, we didn't make a dime on it. If those of you that think that if you bought a home for $400,000 and you sold it 6 years later, that you made money, you absolutely lost money. You didn't make a dime on that transaction. You didn't make a dime on it in most cases. I promise you that. But what if I could show you that this $996,700 home is still only $409,000 or $556,000 today in real money? In other words, even though the market is saying that the house is valued at almost $1 million, if you knew this one piece of information in 2016, that $556,500 that they paid for this house will still buy that house today on November the 15th, 2024, opposed to $1 million. If you guys want to learn that information, I'm going to put an email down in the description of this video. Guys, feel free to email me. I'm going to be teaching this information on top of how to legally, ethically, and morally position yourself directly from the IRS themselves to drastically reduce the amount of money you're losing in taxes. Let me ask you a question as I get ready to wrap this up. What if I showed you nothing else but how to reduce your current taxes by $2,311 a year? And I'm going to show you how to do that 10 times. And you just put that money in the market and got an annual rate of return of 10%. Would it be okay that you are sitting on $420,471 that unfortunately has been forbidden to be taught to the masses? If you say, yeah, guys, go to the email, send me an email, say, I would like more information. That's it. Just send me an email and say, I would like more information. If you want to give me some context of what type of information you're looking for, feel free to do that. I'll put you on a list. I'll let you know, guys, when I get ready to do a private webinar, my wife and I. And with that being said, guys, I got to run. Got to go take me some medicine. I am under the weather, but I'm excited that I was able to get this out. Hopefully I didn't spend too much time, guys, fumbling around, but I'm just all over the place right now. Man, we got work to do. That being said, Mark Pyers, home-based business tax coach and wealth coach, CEO and founder, alongside my beautiful wife and business partner, Mrs. Lavita Pyers, of the most incredible tax educational platform called the Academy of Financial Education, where we teach the masses what the school system is forbidden to teach, and that is the more you know, the less you will legally, ethically owe in taxes. We'll see you guys not at the top. We'll see you on the other side of freedom. Remember to like, comment, and subscribe. And make sure you guys share this video. We'll see you guys on the next video.